All right, let's dive right in. You know, every so often in the financial markets, something weird happens. A story unfolds that just doesn't quite add up. And this past week, that mystery, that puzzle, was all about the Canadian dollar. It was a currency that basically defied all logic, and in a pretty spectacular way. And boom, right here, this is the whole puzzle in one picture. Just look at that split. On one side, you've got the euros soaring high with a strength score of 134. It was the king of the week. And then, way, way down on the other end, you have the Canadian dollar just limping along at 38. I mean, how does a gap like that even happen? What on earth was going on? So, to really get this, we've got to set the scene. Last week's market was all about three things. First, a really weak US dollar. Second, a huge jump in volatility. And third, a super clear line drawn in the sand between the winners and the losers. Now, in that winner's circle, the euro was the absolute champ. I mean, it just kept climbing all week long relentlessly. The British pound showed some incredible strength too, barely pulling back at all. Even the Aussie dollar was holding its own, which was pretty impressive. These were the currencies that were just surfing the wave of that weak US dollar. And then you have the Canadian dollar. Whew. With a final strength score of just 38, it wasn't just losing. It was the weakest currency in the entire G7. The market basically just tossed it aside. It just could not catch a break. And this right here is where it gets really interesting. This is the paradox. Because if you looked at the facts on paper, everything was pointing to the Canadian dollar having an amazing week. Okay, so let's look at the theory, right? Here's the textbook recipe for a strong Canadian dollar. You take a weak US dollar, check. And you add in rebounding oil prices, which is Canada's lifeblood, check. That combo is supposed to be pure rocket fuel for the loonie. But what actually happened? A complete and total collapse. The key thing to get here is that this wasn't just a little bit of underperformance. This was a flat-out contradiction of everything the market fundamentals were screaming. So that leads us to the million-dollar question. If the classic playbook didn't work, what really happened to the Canadian dollar? What were the invisible forces that caused this mess? Well, we're going to treat this like a proper investigation. The source material gives us 4 really clear clues that when you put them all together, they solve the case of the collapsing Canadian dollar. So here's our game plan. We're going to look at how the market's entire story changed. Then we'll see how a quick rebound exposed a massive weakness. After that, we'll talk about news that never actually happened. And finally, we're going to follow the money. So let's get into clue number 1. Okay, this is really the core of it. The market just changed its mind about what mattered. The big story of the week wasn't about oil anymore. No, it was all about the U.S. Federal Reserve and the historic weakness of the U.S. dollar. So all that big money, all that capital went flooding into the euro and the pound to play that story, completely leaving the Canadian dollar and its connection to oil in the dust. All right, our second clue is fascinating. It came from a little event that acted like a stress test for the market. See, halfway through the week, the US dollar had a short little bounce. It didn't last long, but oh boy, the way different currencies reacted, that told us everything we needed to know. And this comparison just says it all. The euro and the pound, they dipped for a second and then bam, snapped right back. That shows you there's real buying interest under the surface. But the Canadian dollar, it got slammed and it just stayed down. Even when the US dollar started falling again, the CAD couldn't get back up. That is a classic textbook sign of deep, fundamental weakness. Now, the third piece of our puzzle is all about something that didn't happen. There was this story floating around that Canadian pension funds were about to start bringing their money home from the US. Now, that would have been a massive shot in the arm for the Canadian dollar. But the problem? It was just talk. It never actually happened. And in a market that was obsessed with real money flow, this potential story gave the CAD zero actual support. And that leads us to our final clue, which is all about following the money on a much bigger scale. You had this huge consensus building among the big banks, Goldman Sachs, UBS, you name it. They were all saying the US dollar's good times are over, and it's heading into a long-term decline. Now, you think that would be great news for the Canadian dollar, right? Well, here's the twist, and Barclays nailed it with this quote. All that money leaving the US dollar, it wasn't just looking for any old place to go. It had a very specific flight plan. And that capital was flying directly from the US into Europe. Canada wasn't even a layover on the trip. So now that we have all 4 clues laid out on the table, we can finally deliver the verdict in this mystery. And, more importantly, we can pull out the one crucial lesson for anyone trying to navigate these markets. So here it is, the bottom line. The Canadian dollar fell apart because the market just decided to ignore its biggest strength, oil. The story changed. And when that happened, it was left with no fundamental support, no investor interest, no good news, and it got completely bypassed by the biggest money flow on the planet. In a word, it was marginalized. And that brings us to the single most valuable lesson from this whole episode. It's a piece of wisdom you can take to the bank. In a market with clear winners and losers, you have to fight that urge to bet on the weakest one to make a comeback. And why is that so important? Well, think about it. For a currency that's getting hammered to suddenly turn around, something big has to change. It needs a brand new reason for people to buy it, a whole new story. And until that powerful new reason shows up, trying to guess the bottom is just, well, it's like trying to catch a falling knife. It's a high-risk game where the odds are seriously stacked against you. So, we'll leave you with this final thought. Markets are driven by stories, by narratives. The collapse of the Canadian dollar is a perfect, almost painful example of what happens when that story changes overnight. So the real question is, the next time the market rewrites the script, will you be listening? Thanks for tuning in.